All right, we just went through the Teranet Market Insight Report, pulling data from the 2024 Ontario Land Registry, and we spotted some key trends that show how real estate investor behavior has been shifting. It's super interesting to see where investors are focusing these days, and we found a few trends that can help you make smarter moves if you're thinking about investing in real estate this year. So let's dive in, but before we do, if you are serious about real estate investing and you want numbers-driven advice, hit that like button, subscribe, and book a call with us if Toronto multiplexes are on your radar. Let's start with condos. In Toronto, condos make up over 65% of all of the sales in 2024. But even though they make up most of the market, that doesn't mean they're doing well. In fact, resale activity for condos hit the lowest point in 10 years. Basically, a big wave of brand new condos hit the market, around 15,000 new units, up almost 80% from the year before. And that oversupply pulled demand away from the older units and made the resale market really, really slow. At the same time, we're seeing what happens when people buy at the peak and you can't hold on. If you bought a home in early 2022 under $1 million and sold in 2024, 1 in 4 sellers lost money. In the GTA, the average loss was $56,000, and in cottage area like Muskoka, losses were way higher, up to $240,000, but obviously there were fewer sales there. The lesson learned here is buying in the wrong area or overpaying without strong cash flow is definitely risky, especially in a market like today. Now let's talk about investor behavior more. Multi-property owners are still the biggest buying group in Ontario, but they've definitely shifted strategies. Most of them aren't trying to build up huge portfolios anymore, and in fact, 55% own just 2 properties and another 20% own 3. People with 11 properties or more dropped from 13% to just 7% in 2 years. And that tells us that people are being more careful, more selective, and less aggressive with borrowing. We're also seeing more individual investors enter the market, not big companies. In 2024, 20% of all of the multi-property deals came from solo single-name buyers, and 1 in 3 of them paid in full in cash. Now, these are mostly millennials or Gen Xers focusing on areas like Toronto where rent demand is strong. They're not flipping, they're buying to hold for the long term and earning stable rental income. And you can see this with the average non-condo homeowner now holding almost 18 years at a time, up from 14 years a decade ago. But not every market is holding up. Secondary markets are seeing more power of sale deals, and that is when homeowners can't make payments and have to sell. So even if prices look cheaper, those areas like Peel do come with more risk. So what is the takeaway for real estate investors in Ontario right now? Well, the smart money isn't sitting on the sidelines. They are just being more intentional. Instead of chasing short-term price jumps on risky flips, they're sticking to prime markets like Toronto, using less debt and focusing on properties that actually cash flow well. That means investing in solid Toronto multiplexes in strong rental areas and not the more speculative condos that don't carry themselves. And this is exactly how our clients are investing right now. Want to see what they're investing in and how it's paying off? Just reach out to us and we can show you how to invest in Toronto multiplexes that generate strong cash flow with stable tenants and strong returns in Toronto.